Alright guys, Gerald here. In this video, we're going to be talking about Fibonacci retracements and Fibonacci levels. So what are Fibonacci levels and why do we use them, right? Traders use Fibonacci retracement levels to identify potential reversal points in a market. After a significant price of going up or down, traders are going to draw Fibonacci retracement levels to figure out where it may retrace before continuing its trend. It makes sense, right? A stock never continually goes straight up. There's going to be periods of pullbacks, right? And these are where traders are going to draw out the Fibonacci levels to find where exactly they can find these entries. These levels, like I said, are used as support and resistance levels. The common retracement levels are 38.2% and 50%, right? These numbers don't mean much to you right now, but we'll be going over it in a couple of slides, right? But I am a value investor and trader. I'm always going to protect my downside. So I'm always going to buy at the bigger, deeper retracements at 61.8%, right? Like I said, I don't expect you guys to understand what this is yet, but essentially it means where the stock ends up falling down at a steeper level, right? This is where deep value is made from, right? And this is how I find my entry levels. So Fibonacci levels should never be used as the sole technical indicator, right? You never want to just use Fibonacci levels and draw them out without using any other things to support your thesis, right? If you use that, it's not going to go well. You always want to find and locate confluences, like the support that I said, within those levels to show that it is a strong level to get into. What are these confluences that I'm talking about? What are these things that support these Fibonacci levels? I use support and demand levels like we've explained in the previous videos, and I use bullish divergences. I particularly use the RSI divergence, right? We talked about RSI in a previous video. Just as a review, RSI, the relative strength index, indicates whether a stock is being oversold or overbought, right? A level over 30 is considered, or a level under 30 is considered oversold, and vice versa. If it's over 70, it's being overbought, right? So what does this mean? Just a quick little introduction onto what a bullish divergence means, right? So a stock, this is just the stock price, right? It's going to keep continually going down, right? But you see the RSI indicator, it's going to make a higher high, even though here you see a lower low, right? This shows a potential reversal. And this, if it aligns with a Fibonacci level, if it aligns with the support and demand levels, this is where you find very, very strong levels to provide your entries into. So next, we'll be going into how to use these Fibonacci levels, right? So here I'm going to go. So here I've pulled up Alibaba stock, right? We've done the research on Alibaba. It showed it's a great fundamental company. Now I want to do a little fundamental technical analysis. And we're going to use Fibonacci levels to see if there's any way we can find an entry, right? So I'm using TradingView. You can use whatever sort of trading platform that you want to use, right? Some people use it within their own brokerages. I use TradingView, an external sort of trading platform, right? So all of them should have abilities to draw Fibonacci retracement levels, right? I'm going to use here to draw Fibonacci retracement levels, right? You want to find a clear trend, right? There's a clear uptrend, right? Higher highs, higher highs, higher lows, right? And then it just ended up dipping. So what you want to do to use for support and resistances, right? You're going to find the swing low, right? Down over here to the swing high, right? I'm going to click down over here and I'm just going to trace it all the way up, right? Right over here. So it leaves us roughly around 71.36 around the 0.786. Look where that ends up being, right? Right at where we are in present day, December 6th, right? This is where I want to pretty much start my entry position into Alibaba. So I'm just going to extend this more to the right so you guys can get a clearer view, right? Swing high, swing low. This is almost to the T where it ends up being, and it's going to be our place of support, right? I expect this stock to retrace all the back up to at least 82.13, right? So that's ultimately how you draw these retracement levels. Let's see how it reacts around these levels, right? Like I said, it usually plays around the 0.38, 0.5 levels. Let's see. Right here, plays around the 0.5, right? 0.5 as another area. You can see it's a significant level of trading, right? And also playing around the 0.618 here. If you bought here and use it as a support level, you would have made a lot of money coming up. Here, up. Here, up, right? Here, up. I personally am a more conservative trader, right? I wait and I wait and I wait, right? It's been very long, months and months, right? Until we hit our 0.786 level, 71.42. I guarantee you, like I said, today's December 6th, December 6th, 2023. Let's see where the stock ends up being in a year's time, right? That gives us the ultimate level of safety and cushion. But I expect within weeks, within even months, right? Or months, even years, but even weeks, we see a retrace back up to this level, right? Even if not, you get somewhere in the middle, you get a huge profit margin from it, right? And this is just one stock. It would work with any other stock. Let's just draw up another stock, right? Let's do like Apple, right? Big company, everyone knows Apple, right? I'm just going to draw a Fibonacci level. Clear uptrend, higher highs, higher lows, right? I'm just going to draw a Fibonacci level right here. Let's see if it plays throughout any levels, right? Boom. All right, so you can see it plays around the 0.5, use it, loses it, loses the 0.129, right? But it uses as retrace levels, right? You can see this is another area of resistance. The 0.38 loses that level, retraces, loses it, right? Like I said, you want to use Fibonacci with support and resistance, right? So let's go back into Alibaba, right? 71.42. Like I said, we're not just going to simply enter Alibaba just because it hits 71.42. We want to see if it's a huge area of demand, right? So I'm going to go to the left. Let's see if it's a huge level of demand, right? And as you can see, huge area where it ends up getting bought up, right? Where institutions are buying these levels. Support and demand, like I said. So, like I said, you never want to use Fibonacci levels solely as an indicator, right? You want to supply or find confluences. I personally use supply and demand and RSI divergences. For sake of better time, or to save some time, I'm not going to go over the RSI divergences, but supply and demand, Fibonacci levels, use these in conjunction, and I promise you, you guys are going to find great profits using this strategy.